Hello, everyone. Welcome to VRIC Media, your most trusted voice in metal and mining. I'm your host, Daryl Thomas, and today I have the pleasure of interviewing Lynette Zang, the CEO and founder of Zang Enterprises. How are you doing today?
I'm doing great, Daryl. It's so nice to be here. Thank you for having me.
Yes. Like we were talking off air, been a long time fan of yours. I've watched your material since I got into precious metals back in 2020.
I'm honored. Thank you so much.
Yeah, and I think you help. I mean, I'm sure you still help people today, but during that time, there was a lot of uncertainty, a lot of unrest and such. And your videos on community and self sufficiency and owning sound money was very helpful for me and ensuring that I was protected.
Thank you. That is my job. And I've actually started, I developed the mantra after 2008 because I knew without any doubt at all, I've been studying currencies and currency life cycles. And I 100% knew that the system died in 2008. And then it was just put on life support to buy time for the new system. So that's when I became a prepper because I believe my research. I know how deeply I go into things. I wasn't a prepper before 2008, but that's when I developed the mantra and have been a prepper ever since, and very grateful for that. Worked really well in 2020, right? Here I am. I'm walking around my gardens and I'm going, see, look at how smart I am. I have all the food I need because the grocery store shelves, of course, they were barren. And then there was a riot at the Capitol, which is not really all that far from where I live, and another riot in Scottsdale, which is not far from where my children live. And I thought, ooh, there is the hole in my preparations. And that's when I went and got a bug out house. So you saw that from the beginning.
Yeah, for sure. Yeah, I got a lot of family in Arizona as well. So yeah, definitely.
Oh, and I expect to see you in person sometime.
Yes, agreed. Yeah, those are definitely some troubling times. So just transitioning to where we are today. Obviously, 2008 was a wake up call. 2020 was a wake up call. We've had multiple wake up calls. We had 2023 the issues with the banks going under, and now we have a lot of geopolitical uncertainty and such. And so, what's your overall outlook on economy, markets, and the financial system right now?
Well, there's a lot in there, but I would say that number one, in 2022, when the Fed and the rest of the central banks started raising rates aggressively, they broke a 40-year trend cycle. And so that was really popping the debt bubble. So even though they've pumped a lot more of this into the system to hide stuff, the fact of the matter is it's over, whether we realize it or we don't realize it. And 2008, I personally do not think it was an accident that Bitcoin was born in January of 2009 and quantitative easing was born in March of 2009. So I knew when I saw it, because I started watching it at about $7 a coin, that was a Trojan horse to bring in the new system. And so where we are right now, whether people realize it or not, but when President Trump signed the Genius Act and gave legal clarity to stable coins, he changed the global monetary system, just like they did in 33, just like they did in 65 when they took the silver out of the system, just like they did in 71 when Nixon handed over full control of inflation to central banks and took us completely off the gold standard. We are in a very, very bad place. I am convinced. I'm not even giving myself any technical wiggle room in here. I am convinced that the stable coins are the tool to usher in the hyperinflation that then will give create the crisis that will usher in the next new system. So I'm quite concerned about the stable coins. Quite
Yeah.
concerned.
Yeah, I want to dive into that more, especially just thinking about the Great Reset, New World Order,
Mm-hmm.
things of that nature. New World Order has been talked about throughout the decades. I remember the video with George Bush, not senior or whatever, I guess semi-senior. I was talking about New World Order and such. And you have a lot of things shifting right now. You got the BRICS, you got many different things happening in the world that seem like there's a competition for power and such. And so, just
Yeah.
what's your take there on just like the BRICS, New World Order, Great Reset?
Well, I actually started using the term reset in 2009 after I watched an interview with Christine Lagarde, who was the head of the IMF at that time. And in a 20-minute interview, I counted, and unfortunately, they've taken it offline. And I didn't save it before. But in a 20-minute interview, she used the term reset about 27 times. And I went, oh crap. So that's when I started talking about it and had people say, "Oh no, you can't say that." I said, "Oh yes, I can, because there's virtually no purchasing power left in the system in the currency. So we have to reset into, oops, sorry about that. We have to reset into a new system. And so what I've been watching ever since then is this systematic shift. And, we've got, the technology is pretty amazing that's out there, and I can see some good in it. But I just saw this report on testing AI, and I'm also old enough to remember the science fiction movies where the machines will take over the world.
Mm-hmm.
But in this experiment, they actually were seeing if the machines would save the person, so who programmed them, or themselves. And 50% of the machines chose themselves. And it was because they needed to conclude their mission. So I can see some really scary things because the level of oversight is just not there. It's just not there. It's like the Wild West in all of
Mm-hmm.
this technology. We're just going to let everything happen and then we'll see. Well, I don't think we're going to like what we see.
Yeah.
Totally. There are good things. I'm not saying that there aren't good things, and I'm not saying that I'm not for change, but there are some things about this new system that scare the crap out of me. I mean, already, people that are watching, does your watch tell you what to do? How about your phone? Does your phone tell you when you're supposed to do this or that or whatever? I mean, the cars, right? The
Mm-hmm.
cars tell you what you got to do. So they're getting us used to that level of control. And I don't want to really give up my sovereignty. I don't want to give up my control. I don't want to give up my freedom. And that's why I position into physical gold and silver, and I develop my mantra:
Mm-hmm.
food, water, energy, security, barterability, wealth preservation, community, and shelter. And arguably, community has become the single most important thing on my agenda because, frankly, we've run out of time.
Mm-hmm.
I mean, I've been working on this hard since the great financial crisis, and I'm probably more ready than anybody else I know, and I'm still not fully ready. So, for anybody else to try and do this in just the little bit of time that we have left, you got to come together, bring whatever it is that you have, whatever skill sets that you have, whatever assets that you have. You need to bring it in and integrate into a community because there's power in numbers, and we
Mm-hmm.
need that power if we're going to stay free.
Yeah, definitely. And you see that in different cultures, across the world where they have more collectivist values versus, I mean, United States has been individualist for a while, and it sounds like there's going to come a time where you better know some people,
I
and
think
come
that
together.
time is here.
Yeah, yeah, for
I'm
sure.
sorry. I'm sorry, Daryl. I really do think that time is here.
Hmm.
But once he signed that, no, I've lived through it before. They like distance between what they do, their policies, and how it is introduced to the public. And it was the corporations that, in the beginning of this experiment back in 1914, it was private corporate debt that was converted into Federal Reserve notes, into this stuff. Private corporate debt that was converted into Federal Reserve notes that justified that creation. Today, with the stablecoin, with the signing of the Genius Act, these corporations like Amazon and Walmart are creating stable coins, and that's about creating an artificial market for dollars because the world is turning away from dollars.
Hmm.
The US has abused its privilege as the world reserve currency. And so they're scrambling to find a new artificial market, just like we did in 71. We created the petrodollar. And I remember that too. I remember Henry Kissinger going over to Saudi Arabia. It was a big deal. I remember watching that on TV. And I also remember him saying, it is not what's true that counts. It is what is perceived to be true that
Hmm.
counts,
Yep.
right? It's all about perception.
Perception
And
is
that
reality.
is, it is. And, and my perception, because I read their work and I see what they're saying, and because I've been a stockbroker and a banker and into these markets my entire life, I understand what they're saying. And if I don't, I dig and dig and dig and dig and dig until I do. Um, yeah,
Yeah.
yeah. We better be as independent in community as we possibly can. We better be.
Yes, yes, agreed. So a couple threads I want to pull on, and just what you had just communicated with us. One, you mentioned the term Trojan horse. So there was a lot of concern about CBDCs. I remember reading uh, I think it was a bill or act passed back in 2020 that clearly stated that the Federal Reserve is going to create central bank digital currencies. That was a big concern. Donald Trump comes out and says that, oh, we're not going to create a central bank digital currency. I think he may have signed something to prevent that. But it seems like this may be a backdoor Trojan horse for the same results, the same thing to happen. And could you speak to that? Stablecoin?
Yes, 100%, Daryl. I agree with you on that. And so, who do you want determining the value of the currency? Because in reality, the easier it is to create money, the more money gets created. But who really benefits from that are these corporations. So, fascism is a mix of corporate and political governance. And in reality, we like to delude ourselves and thinking that we're in a democracy, but we really are not in a democracy. When we had the power, we had redeemable gold in the system. Then the public had the power, and it was a democracy because if you didn't like what the government was doing, you simply walked in with, well, this isn't really it, but all right, close enough. One of these, this is a gold certificate, and you walked out with one of these, which is physical gold. And what that did was it created restrictions around how much debt the government could take on. And so you had the power of the purse. In 33, we voluntarily gave that up. And that's what's happening again today, which is why it's important, because it's just a repetition of history. But let me show you the way that they do it is they keep it looking as normal as possible. And so we needed adoption of the cryptocurrencies. Let me come back to that. But this was original money. This is a 1 ounce gold coin, a $20 gold piece. Oh, it's so heavy to carry around. Who wants to carry all of this? This is so much easier and more convenient. This is a $20 gold certificate, and you see that little gold, little coin looking thing on the end. But at the same time, all that corporate debt created this, the Federal Reserve note. Can you see how much this looks like this, right? And all three of these operated in circulation at the same stated, right? Government said these are all $20. So they all operated at the same time at the same stated valuation. So in 33, when they took these two away, the public was used to using this for 20 years. So they didn't think anything had changed, when in reality, everything had changed. They did it again in 65, where we actually had silver in our monetary system. This is a pre-1965 silver quarter. And then they came out with just junk quarters. It's just junk metal.
It's almost
right?
plastic.
Exactly. But you don't have to worry about it. This was what President Johnson says. That's the same level of purchasing power. He actually even admitted that if anybody tries to hoard the silver, they will crash the silver market, the government. Nobody went up in arms. I mean, I was a kid back then. I didn't understand any of it. But look at how close these two things looked. So when this went away, people thought, and we were told, nothing changes. But ultimately, this turned into this because, wow, you can carry a lot more on here. Look at how convenient this card is. But this is really what I want to show you. This is my physical representation of a Bitcoin. This is a physical representation of XRP. This is a physical representation of Ethereum. Don't they look an awful lot like that?
Yeah.
Okay. So they want you to think, what do they refer to gold as? And why are all these cryptocurrencies either gold, silver, or platinum, right? Why aren't they orange or green or purple? Because they want you to think that these are the same. And they even say, this is crypto gold.
Yep. Digital gold.
Digital gold. It's not. And I'll tell you an easy way to know the difference. Takes labor and energy to pull this out of the ground and to mine it and refine it. But this is indestructible. And this is used in every single sector of the global economy, which means that the energy that it took to create this can be used over and over and over an indefinite number of times. Full demand, full functionality, but it holds that energy for constant and indefinite use forever, because gold is indestructible. Oops. They want you to think that Bitcoin has its value, or any of these cryptocurrencies have value, because they take energy and lots of water to create, but they're used in one place. And that energy cannot be used again. That energy is not stored. It's used up.
Yep.
You see the difference? But they don't talk about that, do they?
Nah, I don't hear that much at all.
Nope, you don't hear that. Nah, that's just a little detail. Let's not talk about that.
Timing's everything in this business. We've seen commodity prices really move up. The copper price, that started to move up strongly. We're not far off all-time highs, although you wouldn't know it from the junior sector and copper companies in general. But I think over the next year or two, we're going to see that really correct to the upside, and you're going to see a lot of money come into the sectors. Vizsla Copper, we're the team that brought you successes including ISO Energy and Vizsla Silver. If you want to learn more, you can find us at vizslacopper.com.
So with the stable coins, obviously someone has to buy the debt. especially with the amount of deficits, spending, and fiscal irresponsibility. They need a buyer of
Yep.
the debt. Central banks around the world are buying gold. They aren't necessarily buying the U.S. debt like they were
Right.
before. That signals a loss of confidence in the dollar.
100%.
And then we've always had like pension funds and such buy government debt, banks and such. But this new thing with the stable coins, it's almost like you mentioned, like it being an artificial way to boost demand for the government debt and treasuries and such, which are pretty much worthless. So could you speak to that?
I can. And I want to back up a little bit to move forward because I'm glad you brought up pensions. It wasn't actually pensions that did a ton of the debt. It was the banks until 2008. Then they had to shift that market, and which they did. And it's become government debt, the treasury, the 10-year treasury particularly, which underpins the global financial system, was really handed over to traders. It became a trading asset. And to your earlier point, absolutely, global central banks have been turning away from US dollar denominated debt, the treasuries, and Japan and China, who after the banks stopped buying it, now they changed the rules so the banks can buy it again. But the China and Japan have been either allowing when the debt matures just to roll off their books and not buying as much. But that's been since 2013, which is also when they really finished handing over the treasuries to the trading market, because banks make most of their money in trading, right? They don't make it in holding anymore. And I think one of the largest, if not the largest holder of US government debt at the moment is Tether. And if they're not the largest, they're pretty close. And they're the biggest issuer of stablecoins as well. So now we have these private corporations. And although banks are private corporations, and so is the Federal Reserve, it is a private corporation, but you have the private corporations that want to sell you goods and services that are now going to be the largest buyers of the US debt. How stable is that? I don't know. We're going to find that out. But because they want to sell you more goods, that means that these stable coins what's going to justify its creation is your shopping. You shop. We'll issue as many as you want. We're going to give you watch within the next couple, 2-3 months. It's going to be crammed down our throats. There's going to be all sorts of benefits. If you do this, we'll give you that. They're going to encourage the rest of the adoption, because I've been watching this adoption, frankly, since 2010. I didn't notice Bitcoin right out of the chute, and I'd have to go back, but I believe it was 2010 when I first started looking at it at $7 a coin. This is not a good position for us to be in, because it's an absolute takeover, an obvious takeover of the system. And I mean, come on, love him or hate him, President Trump is a change agent, right? And he is definitely a businessman. And that is the way that he is running this country, is like he ran his corporations. So I also know, thank goodness, that he is a big believer in gold. So I also do believe that he is our best shot at getting must be redeemable, sound money back in the system again. But it's a battle royale, because the rest of the world is turning away from dollars, and the alliance lines have been redrawn, and there is a whole new decade of trade. Things have changed, whether people realize it or they don't realize it. They will wake up one day to I'm sorry, because I don't think they're going to be very happy with what they see, But with all of the tokenization that they're also pushing for, so that every single thing that you have is tokenized and tracked, and I can sell pieces of this cup all over the world. And then one day I get a smart contract. Oh, you don't own that cup anymore, or that house anymore, or that car anymore. And you don't even realize that you did it, because AI and psychology and psychiatry has nudged you into voluntarily spending all of your wealth. But what it also does at the same time for banks, and I think this is where the trade-off is and why I'm bringing it in now, because what the banks once did in being the change agent to generate and justify the money via debt, corporations that sell you stuff are taking that over. So here's the trade-off: a whole lot more collateral, because the banks are going to be managing the tokenization. And that means that they can have, I'm not going to volunteer it, but if they can tokenize gold and these things that were not in their system and for them to grab onto before, this gives the banks a whole lot more collateral to do a whole lot more leverage in trading,
Yes,
which is how they
yes.
make most of their money.
I'm glad you mentioned that. So a couple things. Yeah, that is one thing that I can say I appreciate about President Trump, is that he is a change agent, and he is bringing things up that haven't been talked about in decades in the leadership of this nation. Things like gold, things like the national debt, and things of that nature. Now, I don't agree with him on everything, and I'm probably more libertarian and apolitical, small government. But I can appreciate that from him. So one thing I was kind of wondering about, you mentioned hyperinflation. I've been thinking a lot about tariffs and just really seeing like, okay, we put a tariff on another nation. They pass that cost on to the businesses that import, and then typically those businesses pass that cost off to the consumers. And so it's almost like a form of taxation in a way.
Let's call it a form of confiscation, because that's
Yep.
what really taxation is. But yes.
Yeah. So I've been thinking about that in terms of inflated costs. Inflation's been plaguing a lot of Americans, and I mean, people all around the world, and people are having a hard time keeping up and such. And so I wanted to touch on inflation for a bit, and then I also want to, well, first let's start with this point, because you were already kind of on this track first. We'll come back to inflation, but I saw an article recently with Tether. They've been buying gold, and they've been issuing a coin that's backed by gold.
Yes,
I think it's
Tether
1-to-1 to gold or
gold.
something. And you've always taught, like, if you don't hold it, you don't own it.
Correct.
And so just want to get your perspective there on a big stable coin issuer that owns a lot of government debt, and then now going in the marketplace, buying gold and issuing a token that's supposed to be backed gold 1-to-1.
Well, the good of it is that it actually is redeemable. I could be off on this, but I'm pretty sure it's something like 500 ounces, which means, so you can't redeem just like 1 ounce. You'd have to redeem 500 ounces, which means that redemption is for the big guys. It's not for the mom and pop.
Yeah, the average person, they not.
Right. That's like a futures contract that is you're going to take delivery of 500 ounces of gold. You have to have the money to pay for 500 ounces. So I like very much and can get behind a stable coin or a cryptocurrency, or even like a glint or some of the others, as long as the gold is redeemable. But that would not even marginally be where I would build the lion's share of my portfolio. However, having said that, since I've been studying currency since 1987, I developed a strategy, and we execute this strategy at Zang Enterprises that is built in layers so that no matter where we are inside of this trend cycle, you are properly positioned. So there's a very first line of defense, and that even includes this garbage, cash, right? That would also include things like gold backs, right? And it would also include things like raw barterable gold and raw barterable silver. That is where I can see a thing, as long as it is redeemable, that's where I can see a place for a small portion, particularly if it's tied to, say, something like a credit card or a debit card, so that it's easy to use when you go into the stores. So that's where that piece fits. Beyond that, it doesn't, because basically that very first part, that's your barterable part, the intention is for you to use it up. That's the intention. However, having said that, the strategy is also built inside of a full circle. So whatever you're putting over here in the barterable part of your portfolio, we're going to be recouping over here, so that at the end of it, whatever it is that you're using, you get it all back, right? Including any taxes, any fees, any costs associated with it. That is all built into the strategy. Then the next part of the strategy is about protecting the intangible wealth that you have already included. And so if you are going into something like that Tether gold, where you're not likely to actually redeem it because it's probably beyond your ability to redeem, right? But you still want to protect it, plus a 401k that you can't touch, or a 403b, or, or Bitcoin or cryptocurrencies. Intangible assets need to be properly diversified with tangible assets. It's that simple. You just want to properly diversify. Then the next layer is about growing your wealth base. And so what you want in there is right now, income producing assets, like anything that's intangible, is severely overvalued. And everybody admits severely overvalued. And while that can last a lot longer than anybody would think, it does not last forever. So right now, we've got gold that is severely undervalued, and we've got all those intangible assets that have been targeted for reflation, right? That are overvalued. That's going to flip flop. And so what you want is the kind of gold that holds its purchasing power. And this is sort of a leverage play in this. But when we see that accumulation pattern, looks like the bottom of a cup, not perfectly smooth, but it's very obvious when you look at a long-term chart, you'll see that accumulation pattern. That tells you that smart money that understands what's happening has quietly begun to accumulate. And the goal, once we see this pattern, is to get you in somewhere down here, right? When that smart money is actually accumulating. So you just follow right along, like the global central banks are doing right now. They're buying gold at the highest levels since tracking began. Yep. And I don't even know that I'm 100% certain that we're seeing what they're actually accumulating with a huge deal of accuracy. It's probably much higher than what they are showing. But don't you think you should do what the central banks are doing for themselves, since they know very well what they're doing to this stuff? They know more about it than I do. So basically, the last part of the strategy is in legacy building. And that's the kind of gold that you would hold through generations to ensure wealth. It's called dynastic wealth. This is wealth that lasts in families at least 300 years. So you can kind of think of the King of England. And what is it, the wealth that they hold? Real estate, truly rare collectibles like that special knot tiara and gold. That's what they hold. And arguably gold is the most important leg of it. You can do all three of them with gold. Clearly you can. You can own a gold mine. You can own a very rare coin or other piece of gold like the King of England does. And you can just have some regular raw gold coins. But if you have that gold, then that enables you to accumulate or at the minimum maintain the rest of that. And therefore, now you have generational wealth that you can pass down. And I don't know why we got talking about the strategy,
No.
but basically that's
Good.
how it's built.
That's good. I appreciate you giving me the answers there. No, so just thinking about it, I mean, a lot of people are in generational poverty.
Yes.
You know, I
Yes,
mean,
we have to break that cycle.
yeah, and you know, we see the wealth gap and everything, and I was reading a post that if your money would have been held in gold, like you would have beat inflation, kept up with inflation and such. And so gold is definitely important, and inflation is everywhere a monetary phenomenon. And so, you know, just thinking about that.
Actually, please I'm sorry, but I have to correct you on
Go
this.
ahead. Go
okay.
ahead.
Inflation is not a monetary phenomenon. When we were on the gold and silver standard, we had ebbs and flows. We did not have booms and busts.
Yeah.
Inflation is actually a fiat money phenomenon that is actually built into the system. And that's actually what enables that income and wealth inequality.
Yep.
Because when they were putting this together, governments wanted to tax and spend. But hey, when you're on the gold standard, that means you, the public, would know about it and you'd go in and you'd pull your gold out of the system. So no, that didn't work for them. Corporations wanted to pay you less, but knew if you were used to $10, you wouldn't accept $5. But if they could make that $10 spend like $5, then there you go. So if we're on a gold standard, none of that is possible because gold requires fiscal responsibility. And, you know, I run this study periodically. So the last time I did it, and now I don't know how valuable it was before. But now with the dismantling of those that gather the information and the data, boy, we are flying blind on any of these numbers. But I took a look at this basket of food from the Bureau of Labor Statistics going all the way back to 1913, and that same basket in 1971, and that same basket in 1925. And what you see is that actually silver, that basket had gone up something like 2,600% during that period of time. Silver had gone up something on the spot silver market, not its fundamental value, but on the spot market, something like 3,300%. So it maintained your ability to buy the same food. And spot gold had gone up something like 13,000%. So not only did it maintain your ability to buy the same goods and services, but it actually expanded your wealth base.
Yeah, I'm seeing a lot of things kind of shift in terms of like the access to gold. I mean, gold has always been accessible, the physical, but I'm seeing a lot more. You know, we talked about a few things, you know, with the Tether coin to gold IRAs to ETFs and such. And I've been like working with some folks that I know that aren't gold bugs, but they are very concerned about the political instability and geopolitics and such. And so I started talking to them about, you know, fractional gold. You know, I mean, now you got the gold backs. You know, it seems like gold is like really, people are being innovative with gold in a lot of ways.
And they should be. And I have to say, you know, I don't ever think of myself as a bug. but I do think of myself as wanting a fair and level playing field for everybody, including the generations yet to come. And so, again, it isn't that I've just studied gold and silver, because a lot of times people will say, and she's an expert on gold and silver. No, I'm an expert on currency life cycles.
Mm-hmm.
And I'm very clear historically on what happens. And so when you bring that up, yes, they are being innovative with gold. And this is a very good thing. But you see, when all confidence in the system is lost and high inflation, we're not that far. We keep kissing the all-time lows in confidence in this system. At some point, we will break through that. And I don't think it'll be too long. But, in order to regain public confidence, then governments put gold back in the system again. And I believe that's what we will see. And so I think that that's also why you are seeing that rise in being innovative. We have to be innovative. Change is inevitable. It is.
Mm-hmm.
And some of that change is really good and positive. Some of that change is really bad and scary. And it always bothers me how little oversight there is when it seems to benefit the governments or the gambling system or any of that. And that's the other thing, is the level of risk that people are taking and how much easier it is to gamble and make money versus work hard and make money. This is not the first time that we've seen that, right? This is the kind of thing that happens 100% of the time. So, just like you're not going to look at me, and I have a granddaughter that's 10. You're not going to look at me and think, oh, she's going to be 11 on her next birthday. Just like you're not going to look at her at 10 years old and go, oh, she's going to be 71 on her next birthday. And you don't look at it like that because you've learned to recognize the human life cycle.
Mm-hmm.
Well, everything has a life cycle. Everything has, including monetary systems. So if you get to understand what they look like, what those typical patterns are, then that enables you to make educated choices because you know what the next most likely outcome is. And this time isn't different. There are some differences clearly because of technology, but it always goes full circle. And this time is not different.
Yeah, for sure. And before we wrap up today, could we talk a little more about silver?
Mm-hmm.
Silver's still very undervalued compared to like the moves that have happened in gold. I think the gold to silver ratio was close to 100 to 1 recently. Silver has moved up since then, and there's a lot of talk about the supply of silver being at critical levels. Could you speak to your outlook on silver? Because some folks, like, they look at gold and they're like, oh, this is expensive, right? Because they've been in dollars, a long time. But silver's still within that range where they can accumulate some. And so, could you speak to silver?
I can, absolutely. But, and I'm going to back up just a teeny bit to move forward because I'll speak about it technically, but I'd like to also speak about it fundamentally, because there are two things in these markets. There's the intrinsic value, which is what the spot market shows you for the prices on stuff that they're going to value it at. But then there's the true fundamental value, which is its value for its most important function. And those are two completely different things.
Yep.
So the real trend is in the purchasing power of this. And anybody can do this anywhere in the world. You go on to the FRED, FRED. That is the Federal Reserve Education Department. And in the search bar, you put purchasing power of the consumer dollar. And when you do that and you look down on that left axis at the bottom, you see a big fat zero. And when you see where its value is right now, you're going to see that it's been a consistent march towards zero, but that's its true value. So 10 trillion, I think I have a $10 trillion Zimbabwe note. It doesn't matter how many dollars you have. It matters what you can convert it into. Having said that, I can tell you undeniably that the true fundamental value of an ounce of gold is somewhere in the vicinity of 40 grand, 33 to 40 grand. And the true value of an ounce of silver is somewhere between 1,200 and 2,000. That's today. The more of this garbage that they print, the higher those numbers go, but doesn't really matter because they're just numbers. So having said that, technically, both of them are severely undervalued. And one promise I can absolutely, or guarantee that I can absolutely give you, is at some point, all assets, all instruments go to their true fundamental value. And this time won't be different. So that's the fundamental value of gold and silver. Technically, what you see when you look at a long-term silver chart, and it's quite unique to silver, is a double cup formation. So you had the one when they took us off the silver standard, they took silver out of the money, and that top, the resistance level on top is 50. So we did that up till 2011 is when it hit it. And then we've been forming the second cup since then. I personally can see as a technician, and I do consider myself a technician, I know how to read these charts, that this is the most powerful accumulation pattern, I gotta say, that I've seen. You don't see a double cup. You just don't see that. So when silver, spot silver, breaks above 50, which, you know, it could happen by the end of this year. It might take another quarter to do it, but it's getting there. It's definitely getting there. Once it can break above that 50, then I think it's off to the races. Now, an interesting point that you brought up, Daryl, that is the lack of physical silver that's out there. But you started watching this in 2020. And so this isn't a new phenomenon because the difference between gold and silver, and actually a big reason why gold is the primary currency metal and silver is the secondary currency metal, is gold is indestructible, but silver gets destroyed in production. So it's actually less and less and less out there. And in the big run in 2020, they changed the prospectus on the SLV, the silver ETF, because the way that it was written and the way that it was written for gold as well is that they had to put together baskets of physical metal. Okay. Now you and I didn't have access to it. It would just be like JP Morgan and the other administrators that had access to the underlying metal, but they wanted you to perceive that backing, right? They did sell off, and they do. They didn't. They still do. They do sell off parts of their holdings on a daily basis to pay their ongoing management fees. So it's actually a diminishing asset, but they rewrote the prospectus in 2020 so that it did not have to be about a actual basket of physical metal because they couldn't fulfill the baskets. They couldn't do it. And that was back then. It hasn't gotten better. So all that SLV does now is mirror the trading market, just mirror the spot market, which is really what both of them were created to do. But silver straddles two worlds. So it gets used up in production. It is a manufacturing metal as well as a financial, or I should say an industrial metal, as well as a monetary metal. And so is gold, but silver gets used up and it's used more. But both of these are used in every single sector of the global economy, which means that the physical gold and silver has the most functionality, the most of any assets out there. This is used everywhere. This stuff is used one place. See the difference?
Yeah.
You're going into a battle. You want a penknife or you want a bazooka?
Yeah.
Bazooka.
Yep. That's true. That's true. Appreciate that. Yeah. Thank you for breaking it down. Just a lot of timeless wisdom there. And I think that people people can get a lot of value from that. So
I
Lynette,
hope so.
where can people find more about what you do? And I know you have your own show and you have some services that you provide as well. And so could you speak to that?
Absolutely. And Zang Enterprises, we are a physical gold and silver company, and we execute that strategy. You don't have to do it, but even if you don't do it, we still set it up in case you change your mind down the road. It's much easier to do that. And it's based on your goals and your circumstances and what you have to work with. Very active on YouTube and Twitter at the Lynette Zang, Instagram and Facebook at Lynette Zang, and the website is LynetteZang.com, but doesn't mean that it's only me.
Mm-hmm. Yep.
Okay. Doesn't mean it's only me. It's not. And so we're building out a network, and there's Emerald Foxes on there every week. And so we have other personalities as well. But we really want to help people. We want to meet them where they are, educate them, help them get to where they want to be. And we want to support their efforts all along the way, even if you disagree with us. We are building community locally so that you can create surety in the 8 mantra pieces: food, water, energy, security, barterability, wealth preservation, community, and shelter. And we are also, I sit on not just me, but we sit on the advisory board of Citizens for Sound Money, which is a local advocacy group that works hard to get silver and gold legalized throughout the states so we can do a bottom up approach and educate our politicians so they understand what sound money is. And also on a global basis, we are very much part of the global sound money movement to get it back in the system on a global basis so that our children and our grandchildren and all those generations that are not yet born, they actually have a level playing field. They can dream, and they have the ability to have those dreams, make those dreams come true. That's probably the saddest thing when I look at my grandchildren. And I see that they don't have the same freedoms or opportunities that I had growing up. And that personally breaks my heart.
Mm-hmm. Yeah, agreed. As a father as well, I'm constantly thinking about that. So lots to think about here, you all. So you all heard it. Get your head in the game. Lynette Zang doing her
Please
thing, so be sure to go check it out. Be sure to go subscribe to her channel, and then be sure to subscribe to VRIC channel, VRIC Media. I'd love to have your support as we're going to continue to be putting out content. So thank you all for watching, and thank you all for being here with us.